Assalamualaikum warahmatullahi wabarakatuh. My name is Hafiz Shafi'i and I will talk about the definition of money laundering. Money laundering is the act of the making money that was obtained via illegal methods, such as the smuggling of weapons, same as if it originated from a legitimate economic operation is known as the practice of money laundering. When money is laundered, it is often done via financial institutions, so that it seems as if the money originated from a legitimate source. A person who launders money will not deposit a significant quantity of money all at once at bank. Rather, they will deposit smaller quantities over the course of time so as to avoid bringing attention to themselves. It is possible to launder unlawfully obtained funds in a place where the rules are not enforced as seriously, but getting the cash there often means smuggling it over international boundaries.
So now, let's look at 3 stages of money laundering. First stage is placement stage. The second is layering, and the third is integration. Now, let's look at each of these stages in detail. Placement stage. Here, the cash generated from criminal activities is converted into monetary instrument such as money order, travelers' checks, or even the cash is deposited into account of the financial institution and even banks. This is very initial stage where the cash is getting placed into the legal financial system. Layering. The funds are transferred or moved into other accounts or other financial institutions to further separate the money from its criminal origin. Integration stage. The last stage is integration stage, wherein the funds are introduced into the system or into the economy. These funds are then used to purchase legitimate assets or to fund other criminal activities which come on legitimate business. Ultimately, this is done to show that the only use by this asset is indeed from a legal source. Now, let's summarize the process of money laundering. The first stage of placement, when we can see the money is getting placed into various bank accounts or financial institutions. Then, this money gets layered through wire transfer, bank deposits, offshore bank account, and even on trade basis. And from there, the next stage is into the integration stage, wherein the money is used to purchase luxury assets. It could also be for financial investment, commercial, and industrial investment. So, this is a typical money laundering process.
Now, I will talk about the method of money laundering. There are 2 types method of money laundering, which is classic method and modern method. For the classic method, there are 8 ways, which is the first one is the structuring of large amount of money into multiple small transactions at banks. Often it costs smoothly. The second one is the use of foreign exchange. The third one, cash smuggler and wire transfer to move money across borders. The fourth, investing in high value and movable commodities such as diamonds and gold. Next, discreetly buying and selling valuable assets such as real estate. Next, foreigner bank accounts, counterfeiting, gambling and shell companies. For the modern method, there are 5 famous ways nowadays. First, online banking. Second, virtual currency. Third, anonymous online payment service. The fourth one, synthetic identity. And the last one, business email compromise.
Assalamualaikum warahmatullahi wabarakatuh. I am Setusna binti Hadi. I will talk about causes of money laundering. There are 5 of them. First, tax evasion. Tax evasion occurs when a person or business illegally avoid paying their tax liability, which is a criminal charge that is subject to penalties and fines. Tax evaders will manipulate their tax form by understating the amount of income they receive from various sources. They will transfer their money to forest bank or invest in real estate projects covertly by hiding their identities and transferring ownership of their non-monetary asset and property into someone else's name. They do this out of fear that the authorities may discover their hidden asset and earnings. Second, vague financial regulation. Due to the tax department vagueness in investigating politicians, elite and the general public about their earnings, monetary and non-monetary assets, it is easy for people to launder money and avoid paying tax by purchasing real estate. Third, bribery. Bribery is related to vague financial regulation, since money launderers may bribe airport employers or financial regulatory officials to facilitate the transfer of funds abroad without paying the necessary tax and without tracing the funds source or destination. Fourth, corruption. Politicians, statesmen, ministers, and others hid the financial and non-financial resources they accrue illegally by act of corruption. For instance, they might accept bribes and prefer to deposit the money in forest bank or other investment. Thus, they would avoid from transferring money to local or personal bank accounts to prevent local financial auditing authorities from discovering the amount of the bribe. Lastly, failure of banks in detecting money laundering. No automated system have even been developed that can accurately track down the source of money. Additionally, there is no incentive to use resources to investigate the money that has been deposited into their financial reserve. This encourages money launderers to transfer funds to forest bank.
Okay, let's move to the next part, which is effect on money laundering. The first one, effect on money demand. It is more common in low-risk nations. In nations with no anti-money laundering rules, a system that safe ban and all customer information and stringent financial secrecy, the informal sector is large. Launderers have easy monetary inflow and outflow. With fast and unregulated money influx, spending rates, particularly luxury expenditure, are rising. Export-import, foreign payment deficit, inflation, interest, and unemployment rates may rise. Black money's irregular money needs will hurt monetary policy. Next, effect on growth rate. Financial instability may harm real sectors. Therefore, enterprise need international investment. Money laundering nations struggle to attract international investment. Price volatility induced by black money in the financial system would harm the economy's reputation in the external environment, making it uncomfortable for reasonable entrepreneurs to invest in the nation. If lawful money flees, investment rates would not rise. Long-term growth will diminish. Next, effect on income distribution. Black money losses to revenue sources disrupt the financial system. Economic concerns have social repercussions, increasing individual and collective wealth decade society. Black money's impact on income distribution is a major issue. Social harm is difficult to evaluate and correct for due to declining economic sources and income inequality. Income inequality encourages crime and makes money appealing. The second last is effect on tax revenue. Revenue from taxes has the most significant share in public revenues. If this income is low, it will raise the possibility that public revenues will not meet the public expenditures. And if this possibility occurs, budget deficit will occur. Income generated by black money is earnings that countries do not tax. This gain will result in reduction in tax tax revenues. The last effect is effect on financial institution. Unknowingly utilized in money laundering, financial institution asset and obligation may shift suddenly, posing a danger. Public authorities are concerned about money laundering at this banking firm. In such circumstance, auditing pressure would intensify and institution reputation will suffer.
For further understanding, we take a look of one real case that we choose, which is money laundering in Pakistan. There are some issues of money laundering in Pakistan, such as drug trafficking, smuggling of cash, corrupt politician and administrator, and tax evasion. First is drug trafficking. The widespread cultivation of opium in Pakistan has resulted in high volume of drug distribution and trade, especially neighboring countries. Loose in controls make it easier for them to carry out these drug trafficking activities. Cash movements are usually undisclosed and done in secret, which in itself constitutes money laundering. If drug traffickers have good relations in business or government, they can give bribes to the authorities to keep their activities safe. Next issue is smuggling of cash. Cash is smuggled across the borders of Iran and Afghanistan, as well as through airport. For this, smugglers try to evade the security checks to launder money, and they also bribe authorities or someone in the surveillance team to let them move the cash abroad. Other than that, the corrupt politicians and administrators, the corrupt office holders, are promoting these crimes either by becoming directly involved in money laundering, making offshore properties, drug trafficking, smuggling, corruption, misappropriation of funds, bribery, and so on. In this regard, it is not only politicians but also personnel in the administrative and anti-corruption department who have been found guilty of taking bribes from money launderers who have been allowed to take huge amount of cash out of the country and in return took bribe from them. Last but not least, the tax evasion. Many elites in the country usually bribe the tax office employees to either show their tax status as paid or to not notify his tax authorities of the fact that the tax has not been paid. Money launderers also bribe officials of the relevant AML authorities to allow the transfer of large amount of cash abroad and label the transfer as clean without paying the applicable tax on it by either reporting an incorrect amount of transferred cash or not reporting it at all. Hence, money laundering proceeds in two ways: by evading taxes and by transferring cash to foreign banks successfully for the sake of getting property abroad, and the widespread culture of bribe play an essential role in supporting this. Next, let's move on to the recommendation of the issues. Countries should criminalize money laundering on the basis of the United Nations Convention against illicit traffic in narcotic drugs and psychotropic substances, and the United Nations Convention against transnational organized crime. Where countries apply a threshold approach, predicate offences should at a minimum comprise all offences that fall within the category of serious offences under their national law, or should include offences that are punishable by a maximum penalty of more than 1 year's imprisonment, or for those countries that have a minimum threshold for offences in their legal system, predicate offences should comprise all offences that are punished by a minimum penalty of more than 6 months imprisonment. Each country should include a range of offences within each of designated categories of offences. The offence of money laundering should extend to any type of property regardless of its value that indirectly or directly represent the proceeds of crime.
Next, legal and regulatory framework in Malaysia to overcome money laundering. First, Anti-Money Laundering, Anti-Terrorism Financing, and Proceeds of Unlawful Activity Act 2001, which was formed on July 2001. This act allows law enforcement, public prosecutors, and court the authority to freeze, seize, confiscate, or forfeit the proceeds of money laundering or the properties involved in it. According to this act, on conviction, those who use money laundering will receive a sentence of up to 15 years in prison. Furthermore, the court will impose a fine of at least 5 times the amount earned by money laundering or RM5 million, whichever is higher. Second, National Coordination Committee to Counter Money Laundering (NCC). NCC consists of 13 government agencies and was founded in April 2000. The NCC mission is to create and implement measures to counter money laundering and terrorism financing. The Anti-Money Laundering Act of 2001 was drafted by NCC in 2001. Next, the Financial Intelligence Unit (FIU), which was established within the Financial Intelligence and Enforcement Department in Bank Negara Malaysia. FIU's main duty is to thoroughly examine information related to money laundering and terrorism financing. The FIU collaborates with more than 12 domestic and foreign enforcement agencies to exchange and analyze financial intelligence data, encourage effective communication among FIU members, and acts as an investigating agency in providing information and evidence for prosecution. Lastly, the Central Bank of Malaysia. It provides numerous initiatives in preventing money laundering, including Know Your Customer guidelines, the provision of internet banking service, and due diligence requirements. These initiatives help banking institutions to obtain customer identity, get financial records, and report the central bank to any suspicious transaction. In conclusion, money laundering is illegal in any country, but until this day, many cases involving money laundering happen in Malaysia and become such a big issue in the country. Cases involving money laundering still increase, even though Malaysia has formulated certain mechanisms, rules, and policy for preventing the money laundering. This money laundering should be overcome, as it can give bad effect to country.